I want to take you through our first backtest. Let's do our first backtest together. I'm going to click on Strategy Builder. Now, there's some important lessons to take from to get us going here. Firstly, you can load a strategy from a classic that I've already built before. So here's some classics just to help us get going. And I'm going to add a lot more, but let's start with the basics before we get overloaded and go nowhere. So I'm actually going to build an MA long-term one, but I just want you to know that there are two ways of using the pre-developed strategies. The one is through these config files, and the other one's through Python files. So we'll talk that through when we get to the Python section, but let's stick with the config. So I can double click this and it will now take us to the config of this particular thing. But this is a complex way to start. So I'm going to actually start with the basics, and let's actually go back to the home base here and let's start again. Sorry, strategy builder. Okay, it remembers. So much for starting again. Let me just walk you through some of the important stuff on the screen here. So there's two modes. There's a strategy mode, which is building a single strategy, or portfolio mode, which has its own interesting dynamics. But for now, we're focusing on strategy. There are different strategy types. There's momentum, there's mean reversion, or there's a combo. You could have a combination of momentum and mean, and we'll build one of those. We'll go through one of those together. And there's tactical asset allocation, and there's a bunch of other types. We're going to stick with momentum. And within momentum, we've got pre-built a number of strategies or indicators, subtypes. There is no limit to what you can develop. You can do that in the Python, so you wouldn't be limited to these particular indicators. But we in the config mode, and we're going to stick to what has been pre-built, and I will add to this as the product matures. There'll be more options, but there's more than enough to begin with. And as I said, Python, if you're a coder, you could use whatever you want to do. So we give this MA long-term, I'm just going to call it MA long-term testing, and it's 200-day moving average, long when above. I'm sure it's saying long when price above the move. Okay, that's as I thought. So what we've got here is the moving average. We've got a choice: simple, exponential, or weighted. We're going to stay with simple, and it will go long when the price is above the MA, and if we allow shorting, then it would be the opposite of this. It would go, so if it goes long when the price is above, then if price is below, it would be a short entry. You can see over here where we can say long only, but we want long and short. It's your choice. Exit parameters. Okay, we'll explain it this way for now. So I'm going to leave this blank. If it's left blank, then what will happen is it will just stay long for as long as the price is above the 200 moving day average, and then when it is below, it will go short. So the opposing signal, it will just flip over, and so it will close out the existing position, and then it will set up a new one. Alternatively, you could set some triggers, and you could use fixed percentage, fixed dollar, ATR times, like you can say ATR times 2 or 3. It would be there's a whole bunch of things you could do. uh, none. Or you could have an indicator that you want to use as a trigger. So you could use an indicator. It's not allowing me, and I need to figure out if that's a bug or because there's no logic to use an RSA here. So RSI. So I know where it is applicable. Bollinger Band would be an example. But that's a mean reversion. So I'm not going to. Well, we can look at that another time. Let's go through the other stuff here. This is important. So we haven't set our symbols what we're going to trade yet, but that will impact our allocation method. So maybe it's actually a good time to go and do that right now. But we need to know where we're going to get our data from. Where's our source of data? So is it from the free one, or are we going to use one of these other ones? I'm going to use Norgate because I'm very familiar with Norgate, and its client is running in the background, so that's all that needs to happen there. And Norgate, I'm going to set as a benchmark SPX, which is the S&P 500, and I want to allow that we can trade the benchmark. There's a important little wrinkle why we need to do that. I'm not going to explain that now. There's more than enough to try and absorb. So let's just add here. We want to go SPX. What other symbols do we want to? There should be other watch lists here. Yeah. So we'll use Norgate's world indices. So let's just see. I just want to clear it and do it again because we just go like this, clear, and then let's go Norgate world indices. There we go. So now there's a whole bunch of indices in there, and I can see VIX is an index, but we don't want to trade that. So let's just go VIX and remove that. Flip, it's still there. Why is it still there? VIX, remove. Okay, it's gone. No, it hasn't gone. Okay, just picked up a new bug there. But for the sake of this, let's leave the VIX in. We'll figure out what's going on shortly. Starting date 10 years ago. Let's make the end date. What's today? It's the 15th. It was meant to pick up that it would be today's date. So I need to figure out why. That's a bug. And we'll just, this is actually worth mentioning. I'm assuming that we're going to use 50% margin for this. This is not realistic because you don't really trade these indexes like this. You would trade the future, or you would trade the ETF. If we were trading the ETF, a 50% margin would be applicable. So anyway, there's a whole bunch of things that you can fiddle with over here. I'm going to ignore all of that for this first time. Now, how many? We've got quite a. You'll see here. What I want to do now is show you the allocation method. So there are a number: equal weight, risk weight, ATR weighted. I'm going equal weighted, which means that if there are 10 symbols in our universe, each symbol will get 10% of the capital of that $1 million, and we will rebalance every quarter. Let's make it every year. So we're going to rebalance every year. So whatever the pot will be of capital will be at the end of each year, it will allocate 10% to each symbol. There's a deviation threshold. So if it's a very small, if it's a 2%, let me think of how to explain this. If there was 100,000, sorry, if there was $1 million and there was $100,000 meant to be applied to each symbol, if one had 101,000, it wouldn't be rebalanced back to 100,000. It would just kind of let it be. This needs explanation on its own. I'm not going to go through that now. You can set an emergency stop loss. This is for the portfolio, not for the individual stocks, for the portfolio. And remember when I said if there's a symbol switch, so it goes from long to short, you can set the number of days that you want before it implements it. Because what often happens is when it flips from one, it whipsaws. It goes over for a day over the moving average, and then it comes back, then goes over, and until the market makes up its mind. So you might want some delay in that before you implement the new strategy, because you could be going long one day, short the next day, long the next day, and so forth. So it's set at 5 days. Once again, a stop loss. If there's a stop loss, usually means something's going wrong, and I've set it here. You can change the day. That let things go quiet for a little period of time. So in this case, 10 days. Once there's been a stop loss, you go quiet for 10 days and then you re-engage. Minimum trade size, fixed percentage. What this means, this should be, I like this to be 100%. So what it means is that you want to allocate 100, if we got $1 million and we put in 10% in each, so that's $100,000. You want to allocate $100,000. Sometimes, if you got no margin, you might want to put a smaller amount because you're worried that commissions and that will cause an inability to do the trade. But it's not a worry in our case, because we trading on margin here with 50%. So what should happen now is we should be able to run this backtest. By the way, everything we've just fiddled with here should be captured in the config editor. And here are the symbols that we are trading, and there's the VIX. Should I remove this? I'm going to fiddle and try. Okay, I hope I didn't screw this up at all, but I'm going to click run backtest. So there are 41 symbols, and just so you remember, equal weight. So whatever the $1 million is going to be divided by 41, and that's how much will be allocated. So what it wants to do when it does this data availability check, it wants to make sure that all the symbols, all 41, have data from the start date, which is 10 years ago, to be included. And let us see if that is working properly. For a first-time backtest, 41 symbols was probably a little bit silly as I'm testing. And it should be instantaneous. So something horrible is going wrong here. A backtest, look, 41 symbols with 10 years worth of data is quite long. That check took maybe 30, 40 seconds, because I'm doing this presentation. Probably felt like a lifetime for me. But there is a segment when that is going to take a little bit of time. So this particular backtest is probably going to take around 10 minutes. But I built this kind of heartbeat telling you every 10 seconds that the engine is still running should help so that you know that it is actually doing something in the background instead of worrying like, is anything happening? So I'm actually going to pause this now because it could take 10 minutes to do this. Okay, we're back. I was watching a little bit of Instagram there. Okay, click on, now it's got to load it. You can see it's telling us what's going on in the background, yeah. 41 symbols, this could be quite messy. Okie dokie, what have we got here? So much to unpack. Wow, where do I begin? Okay, 27% return. You can look at it in percentage or as okay, sorry, got a little bit excited there. You can look at it in dollar or as in percent. So starting balance, there you go, the net profit of 278,000. Look, this is over 10 years, so it's not all that exciting, 2.45%. You can see, I'm not going to go through each statistic here. There's enough to see. There's a fair amount of trades, 1,850, 848, and instruments 39. So it must have dropped one or two off because there wasn't enough data. The score we will come back to. So let's go and look over here. Performance. Here we can see the drawdown. Max drawdown of 16%, which was over there. A COVID baby. Yeah. This one I want to share with you. So this is versus the S&P 500 as the benchmark, and you can see it underperforms. If it's red, it means it's underperforming. If it's green, it's overperforming. So yeah, you can see that it underperformed. This is the portfolio, and this is the S&P 500. So you can look at it like that. I'm scared to look at the cash because this is a place where there have been bugs. Yeah, and the bug is there. Okay, I need to fix that. This is matching. Here we've got rolling annual returns, rolling Sharpe. Current Sharpe is good at 1.58, but you can see that the Sharpe throughout has been only 0.41. Rolling Sharpe really good. So it's a 250-day, 1 year rolling Sharpe, and rolling volatility. You can see that. Okay, what I need to do is I need to convert this into a date. Don't know how that slipped in. Damn. Rolling leverage. So we want to keep the leverage at 1. That's what we program, but the average is only around 0.69 is being used, and there are various reasons why that will be. We're not going to go into that. The average is below 1. What else do we want to see over here? Monthly performance table. You can see it in percent or in dollars. And something I added recently, a transaction log. So all 1,848 trades are in here, and you can see the date and the reason for the trade. So that's useful. Here's the return distribution, daily return distribution, I should say. Dollar there. We can look at daily P&L like that. You can see some massive. I like to look at it like that. So yeah, some almost 6% days. This is COVID related. Yearly. Now let's see what are our current open positions. So these are our current positions. You can see the weightings portfolio simple chart. This is the marked market equity curve for each symbol. Hard to see with so many. Think of ways to improve that, but just make sure. Yeah, there's a delay. Yeah, that is percent. There, it's a bit of a delay based on its size. Also, I need to fix that up. The coloring around there is wrong. I mean, it's not picking up the border. It's black. It should be grey. There is so much I need to explain what the difference between portfolio simple chart, but I just feel like time-wise, yeah, you can see a differentiation. I mean, whatever this one is so much more volatile than the others. Can't figure it out. This rotation history is something that is not applicable here. Allocation history. So this just helps you understand through time how things were weighted. And let's take a look at some individual charts. This is the NASDAQ. So this is pretty cool. It shows you the signals, and yeah, it did pretty well on the NASDAQ composite index. Let's see which other ones would we. The VIX shouldn't. I'm just going to look at it because it shouldn't be traded. Yeah, it wasn't traded. That's good. Just showing you this. Not sure why. Didn't do much, but and now we come to the score, which is a massive subject on its own. This is very much one of our differentiating features, and clearly there's so much here that I need to explain this in much more detail, which I'm not going to do now. Let's just go back to that equity curve. And if I go to the summary, you've got some metrics here to play around with. And you've got the score, and you've got notes here. Basically, you can look at the config if you want to understand what was used, and log. What is that log? It's telling you where everything is. Actually worth showing you over here. In outputs, there's our first strategy, backtest. There we go. And it's got a whole bunch of data in here. Etc. So I'm not going to go too deep in here. It's a rabbit warren. We might not come out, at least not before lunchtime, which is lurking. Okay. Have I, in terms of our first backtest? Oh, wait, actually. So the backtest is over here. And it should have gone to the leaderboard as well. There we go. So that's it for